Hey guys, this is Mark Shawson, the Pattern Trader. There is definitely something going on in the financial markets. In today's market, you have the stock market going to almost new highs in the United States, but you also have gold sitting on close to a 6-year high. And also this year, you've had Bitcoin triple in prices and go almost to $10,000 this week. Um, Earlier this morning, ECB Chairman Draghi announced that he was more than likely going to, take his foot off the pedal and keep easing and pushing rates lower. Also, I think the Australians indicated that they're going to take rates lower. And then tomorrow, Chairman Powell will have a statement on U.S. interest rates. Now, it's pretty well priced in that there's going to be an interest rate cut in the United States in July. But there's also a lot of speculation that the Fed may act early and you may see a rate cut as early as tomorrow. Now, based on what I'm seeing in the dollar today, I don't see the rate cut coming in tomorrow. We had a pretty good bounce today in the Australian dollar versus the US dollar, and also the British pound versus the US dollar. Now, I don't expect to see a lot of strength in those currencies versus the US dollar, but the fact that we bounced, the fact that we reversed, tells me that it's pretty unlikely that we're going to see a rate cut tomorrow. So again, that is my operating philosophy. So I don't try and outguess what the Fed's going to do. I don't even try and think if the Fed does something, what is it going to mean to my investments? Basically, I let price lead me. As you guys know, I only look at price action. I only look at patterns, and the price behavior tells me everything I need to know about where the market's going. A couple months ago in March and April, based on the price patterns in the Australian versus US dollar, I suggested getting short at 71.61, and prices crashed about 300 pips from there. I made about $130,000 on that trade. Also, I suggested going short on April 1st, the New Zealand dollar versus the US dollar at 67.67, and the New Zealand dollar promptly crashed about 200 pips, and I made about $108,000 on those trades. I'm going to make a separate video showing you exactly what I did on those trades, what I was looking at, what I was analyzing, and what the outcome was. Also recently, in late March and early April, I started suggesting getting short the US dollar versus the Japanese yen, just a hair under the 112 level at 111.61. I'm still holding that trade. That trade is up about 300 pips, and I'm holding substantial gains in short US dollar versus Japanese yen trades. So again, there will be a big announcement tomorrow. The FOMC will be announcing their feelings about the economy, the direction of interest rates, and there's likely to be a lot of volatility. So accompanying that, the one pair that now I'm really focusing on by virtue of its price action is XAU-USD. That is the ticker symbol for spot gold. And for you following the futures or on the ticker symbol GLD in the stock market, who are interested in the trackings and movements of gold, you'll be very interested in what's going on right now. Gold is perched on a 6-year high, just a hair below the $1,350 level. Any penetration above $1,360 or $1,380 is likely to result in a long multi-year trend to the upside. Now, to my mind, gold has already broken out of a 10-year symmetrical triangle drawn on the monthly chart, and we broke out in the last month or so. And so to my mind, it's just not a question of if, but when gold continues to thrust higher. So this is the pair that's most on my radar. I would look for any kind of volatility as an opportunity to buy gold on the dips. So again, tomorrow at 2 p.m. Eastern Standard Time, we'll be waiting for the FOMC statement on interest rates, but I don't really care about that. I'm just looking at the price. The price tells me where things are ultimately going to head. Until next time, I wish you a healthy and prosperous trading day.